The morning report for 28th of June 2011. There was a good rise last night on Wall Street. The market closed up sharply. It was up 109 points, or just under 1%, to close at 12,043 for the Dow Jones Industrial. Now, the main reasons the rise is coming through after the bank capital requirements were less onerous than they expected. So the banking stocks took a nice jump, and obviously investors jumping back in there looking for the income. Keep in mind that the banking sector in the US is a bit different to Australia. Our banks are much more heavily regulated, and certainly you saw them play out a lot better through the GFC. Still very keen the banking sector back here at home. I think it's a good place to get good income and get some long-term, medium sort of growth. Now, our market lost 1% yesterday, closing at 4,514 points. ASX 200 at 4,462 points. So it's now below the bottom of our trading range. I expect to see it pull back a little bit in the coming weeks. Certainly if some good news comes through the market, but there is a lot of discontent out there right now, mainly about political issues and about GDP. Now let's just touch on GDP for a second. Look, it's no surprise the cyclone, the floods have caused a lot of spending to happen in Australia, especially up here in Queensland. And now we're starting to see the repercussions of that with the GDP figures jumping up, inflation blowing out a little bit, and now it's a matter of when, not if, the Reserve Bank raise interest rates. Now, I've been pegging for a long time. The Reserve Bank will raise rates. Well, I don't think they'll be in July, but I think August, September we can expect to see a 0.25% rate rise, and I think that'll follow on with another one later in the year or early next year. So if you've got a mortgage out there, probably a good time to start looking to pay down some debt. Certainly not a good time to borrow to invest. The interest rates are obviously way too high to get a decent return, so certainly keep an eye on your debt levels. The other issue obviously is a political issue, and there's certainly a lot of uncertainty out there with the current government falling out of favour. The carbon tax, the mining tax, everything else they're throwing at us at present, so that's probably keeping investors out of Australia for the short term, and certainly I think big companies worldwide are having a second look. One thing we are starting to hear about Australia is sovereign risk. This is something we've never had to deal with before in Australia, but sovereign risk does keep large companies out of the country, and it certainly may keep a little bit of a lid on the market in the medium term until it's sorted. For any questions and queries, please go to our website at growyourwealth.com.au.